Okay, let's start. So today we are going to still continue with reducing balance method, but it's in the form of a question. Okay, so let's take a look at the theory first because I kind of skipped that the other time. All right, so for accounting, for depreciation, right, there are three theories involved. Okay, so in your memory essence, page 48, okay, three accounting theories applicable. But there are two accounting theories as to why a business needs to depreciate. Why should they depreciate? Okay, so one of it is matching theory. So matching theory is more for the expenses side, okay, because we know that for depreciation, we debit depreciation expense and credit our accumulated depreciation. So matching theory is about the expense, because when we expense it off, right, we are actually taking out a part of the cost of your NCA to match against the income that is earned from using that particular NCA. Okay, so in the same year, right, to obtain a true and fair profit for that year. Okay, so let's say you use a motor vehicle for 10 years, okay, to help you earn income for 10 years. Okay, so the income is spread over 10 years. Same thing, the expense should also be spread over 10 years. Okay, so this is what it means. Okay, the other theory is your prudence theory. Prudence theory basically is more for the accumulated depreciation side, because at the end of the day, you don't want to overstate your profits. You also don't want to overstate your assets. This is the essence lah, all right, of prudence theory. Okay, the basis of prudence theory, to be very conservative. Okay, so when we take cost minus, all right, cost less accumulated means cost minus accumulated depreciation, we are actually valuing our NCA at net book value. Okay, right? So now you have a better understanding of what is net book value, all right, what is depreciation expense. So these two theories should should make sense lah, better to you. Okay, and also because now we actually learn two methods, all right, of your depreciation. One is straight line method, the other one is reducing balance method. But we should always use the same method. All right, why? Because of this theory called consistency theory. So the third theory here, right, is only meant to tell us to use the same method and the same rate as well. Okay, so it cannot be this year you use 10%, the next year you use 5%, and so on. Okay, when you memorize, please memorize the whole thing. Basically, it means that you want to use it such that the performance, right, the business performance can be meaningfully compared across financial periods. Okay, I know only some of the keywords are underlined, but you should memorize every single word, okay, so that it makes more sense. If you stop at meaningfully compared, then yeah, doesn't make much sense. Okay, so page 48 is the three theories. Two for why we need to depreciate, and one for why we use the same method, use the same rates. Okay. Okay, so moving back to worksheet 11C.2, we will look at question 4. Okay, as an example of how to do depreciation using the reducing balance method. Actually, so by now you should be quite comfortable with calculating the depreciation for reducing balance method, looking at the journals, statement of performance position, and so on. Okay, but when you look at the question, please answer the question. Okay. All right, so question 4. This one will be my example. Okay. It's actually spread across 2 years. Okay, so on 1st January 2014 and 1st January 2015, you bought office equipment. So on 1st January 2014, you bought 2 office equipment, all right, at 25,000 each. Okay, so when you calculate your cost, right, you need to take 2 times 25,000. Okay, because it's 25,000. Sorry, 2,500 each. Okay. On the second year, in the second year, on the first day, you bought another equipment, all right, which is a printer at 1,120 by check. Okay. So the depreciation policy is to charge depreciation at 20% per annum, means per year, using the reducing balance method. Financial year end is on 31st December. Okay. All right. So the timeline wise, right? Okay. So I have two computers here. I will call them my equipment 1 and equipment 2, EQ1 and EQ2. The printer, I will call it EQ3. All right. So when I draw my timeline for 2014, okay, on the very first day, 1st Jan, okay, this one I bought two. So I bought EQ1 and 2. Okay. On the last day, December, 31st December, you will do depreciation. All right. So you will depreciate whatever you have. So you depreciate EQ1 and 2. Okay. In 2015, okay, 2015, nothing much happens in between the year. It's also first day and last day only. Okay, so first day you bought the third equipment, which is your printer, but you just call it EQ3 for equipment. Okay. Now, on the last day of the second year, you need to take note that you need to depreciate all 3 equipment. Depreciate EQ1, 2, and 3. Okay, so whenever you keep buying more, you need to depreciate more. Okay. So just copy down the timeline. Okay, I need to oh, I hide this. Okay. All right, so on the blank page, can you take out your foolscap paper? So you start off with part A. This is a worksheet 11C.2. All right, part A. 2 causes of depreciation, so we can always go back. Causes is down here. Okay, so any 2 causes: wear and tear, obsolescence, usage, legal limits. All right, just state 2. This is on page 46. All right, so I'm just going to write this. You copy from there. Okay, part B. Part B is whereby you need to record your depreciation for 2 years. So your journal. All right, you only do depreciation on the last day of each year. So 2014, December 31st. So we always debit depreciation of, this is known as office equipment, and we will credit accumulated depreciation of office equipment. Okay. So tell ourselves, how come I debit this account? Because this is an expense going up. Whereas for your accumulated depreciation, it is recognizing more of a contra asset. It's a negative asset going up. Okay. All right. So just apply the formula. So it's 20% times cost. The cost price of this you need to make sure is 2005 times 2 because it costs 2005 each. All right. But for the accumulated depreciation in the first year, it is a 0. All right. So it just minus 0. Of course, you don't need to minus 0, but it's just for you to know that there is no accumulated depreciation in the first year. Okay, so 5,000, 20% is just 1,000. Okay, then for the second year, you just have to calculate the depreciation for all 3 equipment. Okay, the 2 accounts are the same. Okay. In the second year, you have 3 equipment, so you can depreciate them together or depreciate them separately. It's okay, because you fully depreciate everything anyway. You use it for 1 whole year. Okay, so it's 20% times cost. So now the cost, right, is actually the existing 5,000 at 1120. This is the total cost. But you must remember, because we are doing reducing balance method, so we need to minus off our accumulated depreciation. Okay. Okay, so depreciation in the second year is 1024. Okay. Important to note is the cost of all 3 equipments, but the accumulated is only for the first 2 computers because that's the one that you already own in the previous year. Okay, so that's for part B. Okay. For part C, you're asked to prepare the statement of position. So position is basically your cost minus accumulated equals to your net book value. Now you have to take note for your accumulated, right? It has to be you have to add in the new year's depreciation as well. Okay. Can you, wherever you're preparing extract, make sure you write the business name as well. So it's cartoon figurines. Then just copy the title, statements. All right, of financial position. Usually I'll write the word extract at the back, so I'll just copy without the word extract. Yeah, asset. Two zero one five. Actually, it's the last three column. I'm just drawing them bigger, so that is, sorry, you need your subheader. Okay, subheader is NCA. The item, of course, is office equipment. Cost. All right, so the next three column, okay, is cost, price, minus your accumulated equals to your net book value. So the cost right now, of course, is 5,000 plus another 1120, so it's 6120. Okay, it's for all three equipments. For accumulated depreciation, you can do the working at the side here. All right, because usually we don't write any number below your accumulated depreciation. So okay, for the working here, you can show that it's for both years. So it's 1,000 plus another 1024. So it's 2024. Okay. So your net book value, remember, is always cost minus accumulated equals to net book value. All right, so you should get 4096. Okay. For part D, when I was marking some of your previous work, right, then I realized sometimes they ask you to state and explain the accounting theory, but you guys, some of you lah, will just state the explanation of the accounting theory without stating the name of the accounting theory. Okay, so what you can do, right, like part D, let's say you want to use matching theory, you can actually say using. All right, so you can use this standard word using matching theory, comma, then you copy down the explanation of the theory from your memory essence. Okay, of course, this one you can use prudence theory as well, but matching theory will be a better answer because they are asking you why depreciation should be charged. Okay, so why depreciation expense should be charged. For expenses, matching theory is a better theory. Okay, so that's all for today.